Okay. Good morning, everyone. Good morning, sir. Thank you for responding. Let's start. So, in the last lecture, we had completed one question, no? Which last question? I think 15th we had done, no? Huh? Last part writing is pending. Okay. So, झूम हे बघ झूम झाला वाटतंय बघ बघ हे कसं आहे कळलं काय म्हणतोय last part writing is pending. Okay, yesterday the notes I gave you that you wrote. Okay, so in that, okay, point number one is your 1.3 times. Is this done? 1.3 times. Okay, now write from point number four then. Huh? Four also done. Five pending. Okay, okay. Please. चुप रहे. चलो बे. All done? This was question what? 15, no? Tell na 15 this was? Okay. Okay. Question 15. In that na 2 points are left connected with portfolio management. Those 2 points will complete now. Okay. For those who have missed anything, I am again showing it. Okay. So now let us all read this question's point number 2. Just check. 2 and 3 is left now, I think. Yeah. So now they are asking you, okay, do you. Okay, ready? So now they are asking you, see, do you remember that we had calculated the beta of this portfolio to be 1.3? Huh? And we want to reduce the beta to 0.91. Now to reduce, I think we have understood how to do. Beta minus beta asterisk question is there, correct? So for reducing, no, he is saying I am considering two below mentioned strategies. In that, can I say yesterday we saw this strategy, which is the module, take the appropriate futures position. The complicated one strategy is done. Now there is one simple strategy also. Okay, can I say these three securities combined is giving you a beta of 1.3 weighted average. He's saying what you should do is you want to reduce your risk, no? Dispose of a part of your portfolio to acquire risk-free securities. Any idea what they are suggesting? This is portfolio management, but I'm pretty sure you will understand. They are saying that, see, you know, let's say 1 lakh rupees is total invested in this whole portfolio. How much is invested you must be having in your notebook? When we did portfolio return, total value you must be having. You just assume 1 lakh is total invested. I have 1 lakh only. Now right now this 1 lakh is invested in these three shares and the beta is 1.3. What you should do, out of 1 lakh, no, remove, let's say 20,000 for example. Remove 20 means sell shares, liquidate them, get cash, and then invest this cash in government bonds. You are understanding? When that happens, can I say your overall 1 lakh portfolio remains 1 lakh portfolio only? But do you realize that the risk will come down because you are transferring some money from risky to risk free securities? Everybody clear? You understood portfolio management's way of altering beta? Hello? They think alter beta by getting out from there and putting it in risk free. Game over. Everyone clear? So how to do that I have to teach you. So please pay attention. So they are now asking you what is the value of risk-free securities to be acquired. I just now give example, na 20,000 rupees. Like that, how much in this question, actually how much you have to sell? That is the question. So how to solve? Now see, this is point number what now? 2. So I'm writing here point number 2. This is how we do it. Let current share portfolio be X. Huh? How much was the value of your portfolio? I don't have that number. How much? 5,000 lakhs. Correct. So let the current share portfolio be X. Can I therefore say that you will understand what I have written? Everyone? Beta of X is beta P, but can I say I'm putting P as X. So can I say beta X is equal to 1.3 times? All following now? Zoom people, recording is on. Just check from your side. On. Okay. Whenever it is not on, it is your moral and national responsibility to tell me. Okay, ready? Okay. So, beta X, do you realize is 1.3 times? All clear? Okay, now see what I am doing. Let risk-free securities to be brought in. BRF. Okay, let the risk-free securities to be brought in BRF. Desired new beta P is, can I say, 0.91 times. From here you want it to drop to here, correct? For that only I am bringing this guy in. Okay, now let's see if you get it. Can I say new beta P will be WX beta X plus WRF beta RF? Any idea what I have done? Students, weighted average, no, hello. For me now, there are two securities in my portfolio now. X and RF. I hope everybody is clear. You know internally X has three securities inside, but you consider the portfolio of those three securities as one unit. Hello. Call it as X. And can I say now I have got only two securities, X and RF. And I now want to know what is the portfolio beta. Question is saying, no, you don't want to know. Portfolio beta has to be 0.91. I hope everybody is clear. Hello. And weighted average understood, na everyone? Okay. Do you realize this is what you want as 0.91? This is something I don't know. This is something I know is 1.3. This is something I don't know. And the best part is, this is something I know. Didn't understand. Beta na risk free, RF risk free na, so no beta. So can I therefore say that WX will be 0.91 divided by 1.3? Help me please. 0.91 divided by 1.3? 0.7? Exact na 0.7. WX is 0. Calculator mistake, don't worry. Okay. So WX, do you realize, is 0.7? Everyone got it? Can I say therefore WRF should be 1 minus 0.7, that is 0.3. I hope everybody is clear till here. So can I therefore say that out of your 5,000 lakh rupee portfolio, 30% should be risk-free asset. If that happens, then your beta will come down from 1.3 to 0.9. Everybody clear, no? Can I say therefore risk-free securities to be brought in? Okay, risk-free securities to be brought in will be 5,000 lakh into 0.3, that is 1,500. Everybody clear till here? Now the question is, to bring this, we will have to sell shares. I'll just write here for you. That is 1,500 lakh worth of shares will have to be sold. Everyone clear? Will have to be sold. Any idea? Hello? Your understanding? Clear? Hey, Papa. Okay. Okay. Now that you have understood till here, hold on. So can I say we have completed the discussion to point number 2. Now they are asking point number 3. Very interesting point. This is the only place where they have asked this. Number of shares of each company to be disposed of. Any idea what they are asking? See, I and you both are clear that we have to sell 1,500 lakh rupees of shares. But now the question is, but how many shares should I sell? How do I calculate? Hey, do you realize that even if I want to reduce, look at the screen, whatever balance portfolio will be left, no? Can I say, according to my planning, should continue with 1.3 beta? I hope everyone is clear. So balance portfolio will continue with 1.3 beta. New little bit RF I am getting with 0 beta. The average comes to 0.91. Everyone clear, no? But then what this should not get disturbed. Now the 1.3 should not get disturbed. Everybody clear? Otherwise your whole calculation goes down the drain. For 1.3 to not get disturbed, even after selling the portfolio, you will say, sir, if I sell, if 5,000 lakh comes to 3,500 lakh, then of course my beta of the portfolio will change. No, it will not change. Remember, beta of the portfolio depends on only two factors, betas and weights. The weights are not concerned with the amounts. Everybody clear what I'm trying? Hello? You have to keep the weights constant. So in order to keep the weights constant, what you will have to do? 1,500 lakh that you have, no? You know in what ratio you will sell, same weights in which you got the portfolio. Everybody clear, no? So you have the weights with you. What are the weights? Very good weights. Point 0.3, point 0.6, point 1. Game over. Tension. So I will do this. See. Point number 3. Calculation of number of equity shares to be sold. Okay. Calculation of number of equity shares to be sold. Okay. Security. What is the name of security? ABC. What is it? ABC. ABC total. You know that the weights you have to maintain is 0.3, 0.6, 0.1. You know the amount that you need to dispose of is 1,500. Everyone clear, no? So please give me the 15 into 3 for 450 lakh, 900 lakh, 150 lakh. Everybody clear? This is what you have to sell. But they are asking you number of shares. So can I say this I will divide by market price per share. Everyone clear, no? Tell me a market price. 500, 750, 250. So that will give you number of shares to be sold. Help na? 0.9. 0.9 lakhs. 1.2 lakhs. 0.6 lakh. All done. Okay. Hey, why are you so hell bent on maintaining these weights? Because when you sell these, no, then some balance shares will be left. Those balance shares will continue to hold to have the same weights. And by that, can I say 1.3 beta will continue? Are you following now? 1.3 beta of your share portfolio will continue, which will be having a weight of only 3,500 lakh. Everyone clear, no? And then another 1,500 lakh will go in risk free. Overall 5,000 lakh will have 0.91 beta. Everyone clear? Okay, please copy this. Point 2 also pending? Okay, point 2 onwards, please copy. So we got a taste of portfolio management. Okay. They actually don't know what portfolio management what all is there. Done? All done this part? Okay, all completed. Now I would request you all to come to question number 12. Question number 12. Tomorrow we have 7 to 1, na? Options day tomorrow. Why, hey, hello, options means futures and options. Tomorrow we are studying derivatives dash options. Huh? Okay. It's not optional. Okay. Optional lecture. Okay. Okay. So, ready? A high net worth individual HNI is holding the following portfolio in rupees crores. Are we ready? So they are saying investment in equity shares. Now, can I say this is like the portfolio? You understand? Now, you know how we had 5,000 lakhs, like that. It is 80 crores. You are understanding? 80 crores. Cash bank balance is there. Now, beta of the portfolio is 0.8. Which portfolio's beta is 0.8? 100 or 80? 80. Now, I hope you are understanding that it has nothing to do with 20. Okay. Now, the index futures is trading at 5,500 levels. This is F0. The HNI wants to increase the beta, for he believes that the market would, very nice English, up from the current level. You are understanding? Okay. Everyone's story clear what they are trying to say? They are saying that that HNI is saying that, oh, I think, election results, I know what is going to happen and market is going to go up. Right now, my beta is very low. Now, do you realize this is a reverse question? Reverse, not a question, it is a reverse mindset where somebody is now wanting to enter into futures market not to hedge but to leverage. You're understanding? He wants to increase. So they are saying how many index futures he should buy or sell so that the beta is increased to 1.2, and one index futures consists of 100 units. This is basically your multiplier. Any idea what to do? Now see, what position he is having in the spot market? Long position. So can I say to his risk lies in future selling? Correct. Risk lies in future selling. So he will sell. Okay. So I am writing here he will sell futures. So listen, he will sell futures. But he will sell how much futures? Remember the formula: VA by VF into beta asterisk. Correct. But if you notice, no need to put numbers. Just think. Can I say beta is 0.8 and beta asterisk is 1.2? Do you agree? Beta minus beta asterisk. So by this what will happen? This whole number will come negative. Oh, sell negative contracts means buy. Hey, everybody clear? Sell negative contracts means buy. I hope everybody is able to understand what I'm trying to say. So here the answer is not sell. Here the answer is buy. Everybody getting clarity? So we can write in rough if you wanted. Okay, we will start by writing sell, and then we will say, oh my god, there is a negative. So sell negative means basically buy. But in exam, why to take that risk is what I feel. Why to write sell first and then buy? Because if they see just the sell, they might give you wrong. No, I used to do that earlier, but then I eventually started feeling that it could be risky. Okay, and one more thing. What is the logic of buying? Sir, I am having long position in spot. If I buy in futures, there also I am having long position. Huh? So do you realize you have to take the same position because you don't want to hedge. You want to increase the risk. Everybody clear? So can I say if you take opposite position, then do you realize the risk reduces? But if you take same position, then it is as good as being more in spot. You're understanding, no? It increases your risk. Everybody clear? So in the notebooks, write down question 12. Question 12. Write down VA equal to 80 crores. VA equal to 80 crores. Beta P equal to 0.8. Beta P equal to 0.8. VF equal to 5,500 into 100. 5,500 into 100. This is 55 with 4 zeros. That is 5,50,000. Correct? Desired beta P, that is beta asterisk, is 1.2. Everybody clear? So now I am just in black writing something, is not a part of your solution. Since risk lies in future selling, okay, we should sell futures. Okay, this is why am I writing this black thing? Because when you sit to study on your own, then this is what will come to your head by now. You're understanding, na? Okay, my risk lies in future selling. Because if I directly write buy, no, then you'll go crazy. Till now, though you are doing this. Why are you now doing that? Is for uniformity. I'm writing this. We should sell futures. Correct. Now, number of contracts to sell will be VA upon VF into beta minus beta asterisk. Okay, and then I will say since beta asterisk greater than beta, answer will be negative. Sell negative contracts means buy contracts. Everyone, are you able to understand? Sell negative contracts means buy contracts. Everyone clear? So for your official notes, what will I write? I'll write since we want to increase beta, we should take same position in futures as in spot, that is long. I hope everybody is clear. Hello. Therefore, number of futures contracts to buy. Here I'm directly writing buy. Everybody clear? Will be VA by VF into beta minus beta asterisk. VA is 80 crores. This is 5 lakh 50,000. 5 lakh 50,000. Okay. Into beta is how much? 0.8. Okay, and beta asterisk comes to 1.2. Everyone clear? 1.2. So get me the final answer. 80 into 100 into 1 lakh is 80 crores upon 5 lakh 50,000. 581.82 rounded off to 582 contracts. Everybody clear now? Rounded off to 582 contracts. Any doubts? Okay, now let's see how ICA has presented this. This is AFM study module derivatives. I think this question is now not there in the module if my memory is right, but still we'll check once. Okay. Okay. The fund manager apprehends that index will fall. So, how many index futures he should short for perfect hedging? This is module 3. You're understanding, na? Hello. This is not altering beta. And this is different. I told you, na, it's no longer there. Okay, anyways. So, all this is options. In our module now, there are 25 questions. Till question number 14 questions are on futures and 11 questions are on options. Everybody clear? That's it. Okay. All right. Start, please. By the way, just want to tell you, till last batch, I used to write sell only here. You're understanding? And I used to get negative, and then I used to write sell negative means buy. Hello. Why I did this is just that if some examiner directly sees that and gives you wrong, that is what I'm worried about. You're understanding now what I'm saying? You tried from here, no? If you have any doubts, ask, please. You understood, no? If you want to hedge your position, then you take opposite position in futures. Look at me. See, I am having long position in spot. Okay? And generally I take a short position in futures to hedge this position. Hello, I sell futures. Now in the market, if the price drops, can I say I will suffer in spot, but I will enjoy in futures? Come on, everybody. Because can I say in a long position is very bad if the share price drops, but short position in future is very good. I will enjoy gain on close out. Everybody clear? Next, if market goes up, can I say in the spot position I am having long position, can I say I will be happy, but in futures position I will be sad because can I say having a short position. So can you see, if you are having long position in spot and short position in futures, can I say any movement in the market creates exact opposite feelings in both sides. That is what is called as hedging, no? Hello, one loss, one gain. But now here, this person is a gambler, is not interested in all this. In fact, the question also is, he's where is it? He wants to increase the beta of the portfolio. Everybody clear? Students, to increase beta. Do you realize what I am telling you right now is reducing the whole thing? He's saying, no, I don't want this. I want it to increase. So can I say, if you are having long position in the spot, you should not take short position in futures. You should take long position in futures only. Then by that what will happen? Can I say if spot goes up, futures anyways go up. Can I say spot goes up, happy position in spot, happy position in futures also. And if spot goes down, futures also will go down. Can I say sad position in spot, sad position in futures also, because having same position, no? Everybody clear? You are basically doubling your risk now. I hope you got it. Sure, understood? Okay. Done? No, he cannot say I want to hedge my position and increase beta. I hope you realize. Look at me. Shh. Somebody is asking, I want to increase beta, but I want to hedge position. Doesn't make sense. Hedge is an opposite of increasing beta. You understand, na? I hope everyone got it. Hedge means I want to reduce the risk, Baba, not increase. Increasing beta is the definition of risk. Okay? Alright. So, students, are you done with this question? 582 contracts all done. Okay, so now in the notebooks give heading, give heading. There are two concepts left now, not two concepts, one is time pass, one is a concept. Write down first time pass. Module number 5, give heading miscellaneous questions. MISC dot. Miscellaneous questions. Module number 5, na? Module 5, miscellaneous questions. Okay. So, requesting all to come to question number 11, please. Everyone, please come to question 11. Everyone, question 11. MT stands for metric tons. 1 ton is 1000 kg. 1 quintal is 100 kg. Doesn't matter. Okay. Ready? Okay. So they are saying a company is long on 10,000 kilograms of copper at 474 per kg and intends to remain long for this particular quarter. But can I therefore say that these people always fear the fall in prices? Everybody clear? Now portfolio. Sigma of spot and future prices are 4 and 6 respectively, having a correlation coefficient of 0.75. Panic not, just understand that beta is correlation coefficient. Okay, I'll write like beta is correlation coefficient between the asset and futures into sigma asset upon sigma futures. Okay, Zoom people, formula number 2 of beta. Huh? Rxm into sigma x by sigma m. That formula this is. So do you realize this information that you are not understanding is basically an information given to calculate beta. Everyone clear? Once you have beta, by the way, what is the hedge ratio? Hedge ratio means that beta only they are asking. Everyone clear? Once that is done, then they are asking what is the amount of copper futures it should short to achieve a perfect hedge. Hey, perfect hedge means module 4. No. This is module 3. Beta asterisk is not there here. Everybody clear? So your answer will be VA upon VF into beta, correct? Now students, let me tell you something. What is the meaning of this much without dividing by VF? Think now. If I don't divide by VF, what is the value? What is the meaning of this number? It becomes the total value of futures. See, what is VF? VF, can I say, is the value of one futures. When you divide, do you realize you get the number of contracts? Hello, everybody clear? But if you don't divide, can I say you will get the total value of the futures contracts that you want to go for? Everyone clear? Like, hello, you understand? If I tell you that, hey, I want to buy 10 lakh rupees worth of shares. One share is available for 1000. So then, can I say you will get the number of shares? I hope everyone is following. But if I don't divide by one share like this, then also this is value of shares only, but this becomes value of all shares. Everybody clear? Similarly, if I don't divide by VF, no problem. This becomes value of all futures. Everyone clear? Hello? Value of all futures divided by value of one futures will give you number of futures contracts. Everybody clear? Why am I saying all this to you? Because if you check in this question, no, they have not given to you VF data. Everybody clear? They are not telling you how much is the value of one futures contract. F0, nothing they are saying. Nor are they even asking you how many number of contracts you should go for. They are simply asking you what is the amount. I hope everybody is following. Amount, can I say, will be VA into beta. That's it. Everybody clear? VA into beta. Hello? All following, no? Okay. So write down question number 11. Question 11. I hope you are not expecting any theory in module 5. Question 11. Write down VA equal to 4. VA equal to how many? What is 10 metric tons? 10 into 1000 kilograms into 474. And give me this number, please. Many people make mistake. 474 and 4 zeros, no? 1, 2, 3, 4. 47 lakh 40,000. 47 lakh 40,000 rupees is the VA. Beta is equal to RAF into sigma A by sigma F. Refer portfolio management. Okay, what is the correlation given to you? Hey, I have asked a question, 0.75. And what are the sigmas of asset and futures, please? Spot and futures, 4 and 6. 4 and 6. So this comes to what? 0.5. 0.4999, like that it is. So it is 0.5. 0.5 times. 2/3 basically of 0.75. Correct? 0.5. Next line. Amount of futures contracts to be sold. Why am I writing sold? You understand? Huh? He wants to hedge. He has a long position in the spot. To hedge, he will sell futures. Everyone clear? Will be VA into beta. That is 47 lakh 40,000 multiplied by 0.5. 2370. No. Just check. 2370. 23 lakh 70,000. 23 lakh 70,000. Time pass over. Can I go to the next? Okay. Students, the next question is question number 16. Please read only the heading and point A. Don't go ahead, please. Are we ready? They are asking, okay, everyone please. It's a very small question. Which position on the index futures gives the speculator a complete hedge against the following transactions? Oh God, he's a speculator and wants a hedge. You are understanding? It doesn't make sense, but okay. So they are saying, point number A, the share of Right Limited is going to rise. He has a long position in the cash market of 50 lakhs of Right Limited. Can I say this is the VA he is holding? The beta of Right Limited is 1.25. Okay? Students, I'm asking you, what should he do in the futures market? He should buy futures or sell futures? Now, very good answer. Why did you say so? What was the logic? Do you understand this line is just given to confuse you? I'm sorry, not this line. This line is just given to confuse you that it is going to rise or it is going to drop. It doesn't matter. Students, do you understand? If you have a long position in the cash market, you will sell futures. If you have a short position in the cash market, you will buy futures. Here they are saying, hey, you know what? Share is going to fall. It doesn't matter. Everybody clear, no? And then they're saying, hey, you know what? The share is going to remain stagnant. He has a short position. I'll say, Baba, you have a short position. No, you should buy futures. Game over. These three lines are given just to confuse. Everybody clear? Just time pass they have given. So students, answer to point A, which position? Sell futures. Answer to point B, which position? Buy futures. Answer to point C, which position? Buy futures. And one extra calculation, what you have to do? You have to say the value of futures will be VA into beta. Value of futures will be VA into beta and so on. Everybody clear? So see how ICAI has presented it. Let's talk about the first company, Right Limited. They are saying this trend, not trend, can I say is irrelevant? Because can I say they are selling? Why are they selling? Because there is a long position in spot. Why are they buying? I hope you're realizing, because they have a short position in spot. Everybody clear? No? Then institute has given, and by the way, what is this? This is, can I say VA, and this is, can I say beta? Everybody clear now? This is VA, this is beta, and this is basically, as you have written earlier, amount of futures. Everybody clear? This is the amount of futures. And so there was 62 lakh 50,000 short, these two long. So can I say total net, can I say you have to do 25 lakh short. Everybody clear now? So my recommendation to you will be to copy this as it is. Okay. And now what my recommendation is, instead of this trend column, instead of trend column, we will write, spot position. Everybody clear? We will write spot position. This is long, this is short, this is short. Everybody clear? That will make more sense in the solution. Okay. Yeah, spot position or original position. Yes. Okay. Okay, please complete this from here only. Done? All done. Okay. So with that we complete the discussion to question number 9. Can I go ahead? I'm not question 9, sorry. Our book question 16. Miscellaneous questions done, huh? We are done with miscellaneous. Now last concept of the chapter. Okay, ready? Last point of the chapter, last concept of the futures part. Right, module number what will come now? 6. Please give heading module 6. Module 6. And give heading mark to market. Mark to market. Okay. Please give heading module 6. Mark to market bracket M to M margins. Mark to market bracket M to M margins. Okay. Are we ready? So students, margins are market's way of simply ensuring that counterparty does not run away. Okay, what do I mean by this? Can I say one party is in gain, one party is in loss? In futures. You remember in that Meet and Sania's example, Meet was in gain. Now his gain, Sania's loss. Sania should pay, no? What if she runs away? So do you realize now I'm not teaching you any calculation, I'm just teaching you a mechanism by which market ensures that she doesn't run away. Everybody clear? So in that there are two areas that you have to study. One is called as initial margin and one is called as maintenance margin. Okay, there are two concepts. So I'll just write down the notes here. You can write with me, write down. Margins are deposits that that investors need to do with their brokers without which they cannot take positions in derivatives. Such a margin or such a deposit is called as initial margin. Such a deposit is called as initial margin. Also, if margin depletes, investors will have to refill the margin. Semicolon. Such refilling is called as maintenance margin. All done? Margin is linked to market movement. Margin is linked to market movement. Check following extra question. Full stop. Okay, so I'm now giving one extra question, but this extra question you write later, but you take it from me. Okay, so you can call it as variation margin. Yeah, we call it as maintenance margin, same thing. So we don't have a variation margin in our syllabus. Initial maintenance, bas. समझा? Just 1 minute. Okay. So अपना भेज रहा हूँ, भेज दे ग्रुप पे. Mahalakshmi, I'm sending it to you. Just take it. Huh? Got it? Just check your. Okay. Now you have that with you. So students, ready? I'm in some time going to send you one more screenshot. That also you take. Right now, don't write anything. Okay? Please read the question, everybody. I'll explain to you what margins are and how it works through this foreign question. Read carefully. Already? Okay. Now let me explain how this works. Okay, it's very interesting. So you have taken a long position on June 5th. Hey, let me be the counterparty. I have taken short position. You have taken long position on June 5th and two gold futures contracts of 100 ounces each. This is the lot size. Okay. So one contract of gold futures, gold futures, commodity futures is 100 ounces is the lot size. Two futures contracts you have taken long position. You bought futures, I sold futures. Everybody clear? Now your broker told you, told you initial margin is $2,000 per contract. Okay. Do you understand that you must have paid your broker $4,000? I hope everybody is understanding. Why $4,000? Because you are going for two contracts. Now, first things first, is this a cost of going for futures? No, it's a deposit. Everybody clear? It's not a cost. Futures are free of cost. It's just some deposit you are giving to the broker. Why you are giving, you'll understand now. Everyone ready? Now, the broker tells you, look boss, maintenance margin is 1500 per contract, which means for us it is 3000. Everyone clear? Two contracts. Now, when you entered into the contract, the F0 was 600 and it closed on June 26 at 592.3. Now, the numbers in the second column, except the first and last row, represent F prices at the closing of trading. Okay. First of all, if I wouldn't have been talking about margins and all, you know what I would have told you? You are suffering a loss in this. You know how? Can I say there is a buy at the rate F0? There is a sell at the rate F1. Now when you get out, hello. So just calculation wise, do you realize that loss on close out will be two contracts into $600 minus, or I might say on 592 I sold, na 592.3 I sold, 600 I bought. I means you bought, and do you realize into 100 ounces lot size, this eventually comes to how much? Please check. How much? 1 4. Okay, $1540. Can I say should come from your pocket to my pocket? Everybody clear? Hello. Now till now we have studied. Hello. Till now we have studied this only. Everyone clear? We have been doing the gain on close out, loss on close out. Who pays this gain or loss? Counterparty, no? Everybody clear? Hello. So if you are in loss here, can I say the same 1540 I am in gain? But do you think, or have you ever thought that, sir, you will be waiting for your money? What if you run away? You understand now? What is the mechanism that ensures that there is no, in CFA they call it as counterparty default. You're understanding? Counterparty default, or as they call it in FRM, default risk. Have you heard of this term? Default risk means what? Default risk means counterparty risk only, meaning other person is supposed to be performing something, that other person doesn't perform is also a risk na in life. Hello, everybody clear? What? Credit risk also it is called. Credit risk, default risk, counterparty risk. Students, in the history of NSE, BSE, there has never been a counterparty risk. As far as futures are concerned, now you might think, my God, India is behaving so nicely. No. NSE has mechanism. Everybody clear? That mechanism is what I am teaching you. Everyone ready? So, what did your broker tell you to do? Your broker told you to deposit 4,000. See, in NSE, BSE will not deal with you directly. They will deal with the brokers. Brokers deal with you. Everybody clear, na? So, students, do you realize that it is the brokers whose neck NSE, BSE will catch if one of the clients of the brokers is in loss in the derivatives position? You're understanding, na? Baba, give money, other party has to be paid money. So, brokers will ensure that there is a mechanism set by which never ever a situation should come that broker has to pay from his or her pocket. Everybody clear? So what is the mechanism? Broker tells you, hey, you want to enter into futures contract. First deposit money. You're understanding? I'm getting it. They're saying first deposit money. How much money they're asking you to deposit? $2,000 per contract. 4,000. Just a minute. Okay, $4,000 you are being asked to deposit. Correct? This deposit is called as initial margin. Everybody, are you all there? This deposit is called as initial margin. As you can note, everything is there in that question only. See, the words and all are there. Okay, initial margin $2,000. All clear? Everyone, can we go ahead? Okay. Now, how does it work? Students, somewhere on June 5th, okay, somewhere on June 5th, do you realize you did this transaction at let's say 11 a.m. in the morning, and this is 3:30 p.m. Everyone clear there? That's what they are saying, that except the first and last, all the future prices are at the closing of the market. Everybody clear? So on June 5th, 11 a.m., you entered into this transaction to buy futures at the rate $600. Correct? My question to you is, on that day when it ended, by the way, remember, you are having long position in futures. Long position in futures means sad movements if prices fall. You're understanding, no? And happy situation if prices rise. Everyone clear? Now tell me, 11 a.m. to 3:30, when 3:30 markets closed, it was sad situation or happy situation for you? Come on. Sad, no? $3, can I say you lost? Done. Okay, what is your daily gain or loss? Can I say $3 into 100 ounces into two contracts? Come on, everybody. $3 into 100 ounces per contract into two contracts. $600 you lost. Hello. So that $600 that I'll put here. Everybody clear? Cumulative is also 600. Now you know what is the beauty of this? Your margin will now reflect like this. I hope everybody is clear. Your margin will now reflect like this, and my margin will become 4,600. Everybody clear? My margin will become 4,600, which means, do you understand that it is not the due date for which that the market will wait for recovery of money. Every day, every hour, every minute, the account is settled only. Everybody clear? Anytime you want to get out, no problem. One person's money has gone into another person's account. Everyone clear? As the future, understanding, no? As the futures are fluctuating, the margin account also will be fluctuating. So nothing to worry for any party. Getting clarity? But then your question will be, what if now this 4,000 of you has become 3,400? You still have some game to play. But do you realize one day will come when this will become zero? After that, can I say you can default? I hope everybody is clear. You understanding, no? What you gave is the max you can lose. Like for example, you took somebody's house on rent. You gave deposit, no? Now you do any mischief in that house. Whatever mischief you want to do, you do. Can I say maximum lose is the deposit that you have paid? Hello? You're getting it? But here it is not like that. Here it is, oh, margin account is depleting. They will make you pay. They will make you pay more. Everyone clear? I'll share with you how. Now let's move on. June 6th. Students, here of course academically we are showing the margin account once a day. In real world, every second it will fluctuate. Everyone clear? Okay, I think the voice is cracking, no? Little bit up and down it is happening. Anyways, you're able to hear now? Okay, we'll go ahead. Okay. June 6th, 596.1. 596.1. Help me. Loss or gain? Loss. How much rupees loss? How much dollar loss? 180. 180 is the loss. How did you get it? 0.9 into 100 into 2. Everybody clear? Or from now onwards, whatever is the difference into 200 we will do. Everybody clear? So can I say this becomes 780 cumulative loss? 180 dollar will further go away from your account. 3220. Everybody clear? 3220 will be the balance in your margin account. Everyone following? Hey, wow, June 9th celebration for you, for me sadness. Hello, everybody clear, no? Because can I say the prices have risen. How much did it rise by? 2.1. Correct, no? So into 200, 420. Yeah, I just tell me. 420. 420 gain. 420 gain. Can I say your cumulative loss will reduce? 360. Very good. Margin account will improve by 420. 3,640. 3,640. June 10th. June 10th. Oh no. Again it went down. Tell me. 220. 580. 3420. June 11th. Oh no. June 11th. 80. 660. 3340. Is this right? Okay. Next, again June 12th. Oh no, what is happening? June 12th. 260. 920. 3080. Everybody clear, no? Next, Oh God, what a drop. 420, 1340, 2660. Stop. The moment it becomes this, no, broker will get alarmed. Are you all there? He will get alarmed concerning not me, but you. I hope you are getting it. Because for me, in my margin account, can I say, your 1340 has gone, has come into me. Everyone clear, no? But your broker will get worried because till now at least, my gain, you are financing. Hello? Because, and can I say, you can continue financing it till the time this money is there. Do you realize if it depletes and becomes zero, can I say broker cannot come running behind you to your house, give money, give money. You're understanding, no? You know what will broker do? Broker will call you. That call is called as maintenance call. Or that is, it's all on software only. I'm just trying to explain to you. It's called as maintenance call. Maintenance call means, students, do you realize you will not, it's time for refill. Everybody clear? Time for refill. Which means they will not wait for you to drop to zero and then call you to refill. Everybody clear? It will go crazy. They keep some level, from there only you have to refill, and that level, students, is called as maintenance margin 1500. Everybody clear? Arey sir, but we still have 2660. No, time is there. Arey Baba, 2 contracts. Can I say 3000 is your maintenance margin? Everybody clear? Can I say you have breached it? Now, if you don't refill it, you know what broker will do? Broker will close out your position on their own only and throw you out. Everybody clear? And students, can I say, whatever loss you were to suffer, you have already suffered by now. There is nothing more that the broker needs from you. Everybody clear now? You had paid 4000 already. It is now 2660. Hello? Your 1340 is gone. Correct? Now that 1340 that you need to refill, you understand now? You refill. You want to continue your position, or you want to get out? If you want to continue, you have to bring it back to 4000. Everybody clear? To bring it back to 4000. Hello. To bring it back to 4000, do you realize you will have to refill 1340? Hello. I hope everybody is clear. That is called as margin call. You have any doubts? Understood everything? Once you got margin call, 1340 you invested, remember your margin account is back to 4000 now. Hello? Okay. June 16th. Come on. June 16th. How much? June 16th. 60 rupees gain. Cumulative. 1280. Can someone tell me how much will be the margin account balance? That's it. 4060. Everybody clear? Next. $360 loss. Just confirm everyone following, no? $360 loss. 1640. 3700. 3700. Next. 180 gain. No, hello. June 18th is a gain. Next. 1460. 3880. No, I think 180 rupees will add. Okay. Okay, next. My God. Look at what happened with you on June 19th. Come on. Tell me what is the loss. 1140. Cumulative loss. 2600. 27. What do you think will happen? Call. Tell me how much. You have to bring it back to 4000. Huh? So 4000 minus 2740. So I hope you realize it is not always this number that you have to refill. Huh? Hello. You have to bring it back to 4,000. I hope you're getting it. So do you realize this has to come back to 1260 here? Hello. I hope you realize this number is also inclusive of this. Now you're getting it now. All that is there. Okay, 1260. Next is Shanti. Correct na? 2600 2740. Okay, next 20. How much? No. 220. Something wrong I've written. So sorry. Okay. My bad. Okay, sorry. This is 4,000. Everybody clear na? Margin will come back to 4,000. Done? Yes. Okay, next. 220. 220 is the gain. 2380. 4220. Next. 120 gain. You all are following, no? Hello everyone. How much? 2260. 4340. Wow, good news. 460. 1800. 4800. Gain na 260. 1540. 5060. Everybody clear? Students, I want you to tell me this number that you see. Do you realize this number is your final loss? You remember our calculation also shows that only. You are understanding it is basically end, and for me, what I have been teaching you only works. This is just a mechanism. Everybody clear na? End of the day your loss will be the F0 and F1 difference. No, hello. Internally all that happened, but end of the day it is F0 and F1 difference. Everybody clear? Okay. You can also think like this. Students, take your calci. Take 4,000 on calci. This is what you invested, correct? Plus 1340 plus 1260. Can I say this is a total investment? And your investment at the end is now only 5060. So minus 5060, 1540 is the loss. Getting clarity? Okay. So what I will do is, this also I'll give you screenshot now. You're getting, one is the question, one is the solution. My recommendation is you write only once. You getting it now? Write only once, and in that you have to fill up the numbers. Hello, everyone clear? Okay. So, okay. Ritika, on. Sandeep, I did not understand your question. It is futures price, no? Futures price will keep changing every day. Everyone got the question and solution? Done? Can I go ahead? Okay. Now, so for this, how much side you have to leave? Only this much is there. Now you understand? No? This is the whole thing. One, okay, one side you can leave. And tomorrow's lecture, no, remind me. I'll give you this note in the bottom. You're understanding that what, so that you know that what we have been doing is not something different. Huh? It's the same thing. 1540 we used to get like this shortcut. Just remind me tomorrow once you're done writing, I'll give you that extra note below. Okay. Now come to our JKSC textbook and come to question number 8. Just tell from 1 to 16. Only 8th is left now. 1 to 16, only 8th is left now. You're getting confidence now in derivatives. Hello. Okay. Thank you. So, Zoom people, clear now? Everything? Okay. So, now please read question number 8. I hope you're understanding the question language. Okay. Acha, one thing I just remembered. Come to your notes. You have written refill now. Also, if the margin depletes, investors have to refill the margin, put a star and write down up till initial margin, not up till maintenance margin. What do I mean by this? That means when your margin account became 2660, I did not ask you to refill it to 3000. I asked you to refill it back to 4000. 4000 is the limit. Everyone clear? Back to initial margin. Okay. So what are they saying? See, on November 15th, when the spot, it will do one thing. This question you did know, okay? Can I say we'll make same columns now? And we have to just start filling the data, okay? Everyone please write down day, futures, prices and so on. Question number what now? 8. Question 8. So there is day, there is futures prices. Futures prices is F0 of that. Sandeep, futures prices is F0 of that particular date. Okay, futures prices, daily gain or loss, cumulative gain or loss, margin account balance, margin call. Margin call slash withdrawal. Like this you write, I'll explain. Margin call slash withdrawal. All done? Okay. So on November 15th, when the spot price for telco is 473, Mr. X buys 15 contracts of telco futures at 491. This is S0 but it is useless. This is the price, na F0, 491, 15th November. So we will write here 15th November, 491 is the price, dash dash. Done? Next, assume that initial margin for telco futures is 800 per contract. Can you tell me how many contracts? 15 na? So 800 into 15. 12,000 is the initial margin. 12,000 is the initial margin. Done. And the maintenance margin is 600 per contract. Means if it breaches 9,000 and below, bring it back to 12,000. Everybody clear? Okay. All right. Given that each contract is 50 shares, what is this? Lot size. Hello, everybody clear na? Multiplier also we can call multiplier, we call it for index. This is lot size, okay? Daily futures prices for the next few days are as follows. Why again November 15th they have given? Closing. Okay, so 496. Okay. November 16th. Okay. November 15th, 49. Don't go ahead, be with me only. So 15th November 496. 15th November 496. He has bought futures or sold futures? Check. Bought. So this is gain now for him. 5 rupees into 50 shares into 15 contracts. Wait. 50. Hello. 50. क्या बोला? Ready everyone? Okay. So tell me what is the daily gain? Daily gain 3750. 3750. 15,750. 15,750. Done. Then 16th of November. 16th November it went to 503. This is 503. How much rupees? 7 rupees. 5250. Cumulative 9,000. 21,000. Now stop. There is something that happened here. Okay? On 16th of November, what you did? Assume that Mr. X withdraws profit from his margin account only once on November 16th. When he withdraws half the maximum amount allowed, okay, can I say this guy was supposed to keep 12,000 na initial margin, hello? From 12 it has gone to 21. Can I say the profit which he has earned is 9,000. Out of 9,000, he is withdrawing how much? Half. Everybody clear, na? That is 4,500. So here you just opposite, na? It's an outflow. 4,500. We'll put a star and we will write down somewhere below. You don't write now, just I'll write down. It is 21,000 minus 12,000 into 50%. We'll first complete the table, na? And then we will write. Everyone ready? Okay. So I think beyond this, there was nothing great in the question. Can you try, please? Start. There could be some margin call. Huh? Please be very alert. There could be a margin call. And by the way, what will be your margin account balance also? Please be alert. You're understanding? Next one. Okay. Take your time. Please check your answers. Is this right? You got a margin call 6750. Oh, at the end you are in no loss, no gain position, huh? You know why? Because you started at 491, ended at 491. F0 and F1 is same, no? Hello. So how can there be gain or loss? Everyone done? So students, congratulations. With that we finished our futures. Finally, big thing done. You know? Acha, one thing is there, one thing. This is my responsibility to tell you. Otherwise I will not be able to. See, please understand. In ICAI module, no, there is one complication. In the module, there is one question on this uh, margin. I don't know whether they have kept it or not. Yeah. Can you do this question? Question number 14. So in your notebooks, just write down. Also check. Also check ICAI study module question 15. Also check ICAI study module question 15. Also, I'm sorry, question 14. Also check ICAI study module question 14. Practical problem, huh? Practical problem 14. Everyone done? And in this question, out of the blue, from nowhere, ICAI has given to you information like, okay, just 1 minute. They have given information like this. Average daily absolute change in the value of the contract is 10,000 and standard deviation of these changes is 2,000. They call this as something called as mu. Mu is another statistical term for average, and this is sigma. Okay, and in the solution, there is nothing in the theory. Huh? Upstairs, nothing is there. Suddenly, in the theory, they gave one formula out of nowhere, where they are saying initial margin is equal to mu plus 3 sigma. Please see this. Mu plus 3 sigma. So students, as you know, sigma was 2000, 3 sigma is 6,000, not 6 sigma. Hello, everyone ready? And students, do you realize that this is how they calculated initial margin? I would request all of you to kindly remember that there is such a formula that could come. Everybody clear? A formula on initial margin. So when you have written there, check ICAI, also write there specifically, check formula for initial margin. Check formula for initial margin. Okay, check formula for initial margin. And then they are also telling you in that question, maintenance margin is 75% of initial margin. And then students, I think you know what kind of calculations are to be done and all that. Everyone clear? Can we go ahead? Okay. Acha, see one thing here. Note. In their question, what columns they are making? Day. They are not making the F0 column. They are not making the daily gain, cumulative gain. They are simply doing all that in a column called as changes in future values. I hope you realize this column is our daily gain column. Hello. And then straight away margin account and call money if any. Everyone clear? No? That is how they do it. You will check this please today if possible. This is your homework for the day. Today I'm not, no theory I'm giving you. Oh no, I'm starting options. Let's see. Ready? Okay. So question 14 done. Alright. Now. Give me a minute. एक minute. हाँ. Parshva, yes. Ready? Everyone, can we start? Okay. Now, listen carefully. See, you want to try currency futures? You want to try? Or you want to go to options? We will try. In case you feel, sir, okay, then we'll stop. We'll go to Forex later on, whenever we do Forex, and then we'll do. Otherwise, because see, listen, right now you know futures. Now there's going to be a long lectures on options. You will forget futures. You're understanding, no? And then there will, right now you don't know Forex, but you know futures. Later you will neither know Forex nor futures. But then we will do Forex. Then you will know Forex and absolute and neither futures nor options. You're understanding now, because by that time Forex would have happened. So always there will be some problem. You're understanding, no? With this. So I want to experiment. You want to try? Or you're saying, no, no, sir, let it be. Let's try, no? See, anyways, it is only half an hour left in the lecture. Okay. The time goes so fast. No, a break we will definitely. Huh? So, uh, so you feel that if you get 2 minute break, it is like Sukha Puri after Bhel. That without that, no, we don't feel that lecture is complete. Huh? South India, you know what is Sukha Puri? You've heard of it? They give you there at the end little bit the Sukha Puri they give. Okay, okay, wow, very nice. I thought only okay. Free one, that only, free. Okay, 2 minutes relax. 2 minutes relax. Okay, in your notebooks, everyone please give heading currency futures. In your notebooks, please give heading currency futures. Module number what now? Module 7, no? Okay, write down Module 7 currency futures. Huh? Nothing different. Huh? LNT futures are there, na? Like that currency future. Everybody clear? Okay. But there will be one problem here. Oh, yes. One problem here will be, look at me. What in LNT futures, what is the underlying asset? LNT share. And for that, can I say you're paying a price in rupees currency you're paying? Hello. So can you see there is a product called as LNT futures or LNT shares, and there is a price you are paying for it in currency. The problem you will face in Forex is both product and price is currency. You have to think a lot. I hope you are understanding. Both product and price will be currency. You will not realize where is the gain. Gain is in this currency or that currency. You understand? Those calculation problems will happen. You want to face it or Forex? Want to face it? Let's see. One question I'll try. If it happens, great. If it doesn't happen, we'll go home. Because by the time 9:30 will happen. Everyone clear, no? Okay. All right. So, sir. Okay. Please read question 43 of Forex. Everyone, please. Please read question 43 of Forex. Please read question 43 of Forex. By the way, in last question you wrote this note. What the withdrawal note. Withdrawal symptoms. I got one message now. Sir, you are doing IRR on students. Trial and error. Okay. All right. So, okay. So please now very carefully read question 43, and the success of our next half an hour depends on how mentally you are invested in the story of the question. That I cannot help you within that. You have to think about it. Avoid talking to each other. Come on, everyone. Become this PINC and start reading. Understood the question? Can I start? Okay. So they are saying that PINC is a company operating in the USA which imports goods from QPLC in the UK. Now, you know what is the problem here? Okay. in shares, what is the problem? The share is the problem is, sir, I don't know at what price I'll be able to buy or at what price I'll be able to sell. The future uncertainty in the share price is the risk, no? In forex there is other risk. In forex, what is the risk? Uncertainty regarding currency exchange rates. Everybody clear? What does that mean? You are operating from where? You're operating in USA. Now I'm going to use some terms and I pray you understand. Your home currency, can I say, is dollar? Everybody clear? And what did you do? So you just think you're Donald Trump, okay? You purchased goods from, Ben Stokes. You're understanding? No, not Ben Stokes. No. You purchased someone, please. UK, who is there? London, England? Huh? Rishi Sunak. Huh? Okay. Rishi Sunak. Very good. Okay. So you are purchasing goods from. You are Donald Trump. Huh? You are purchasing goods from Rishi Sunak. Now you are supposed to pay Rishi Sunak how much? 6,50,000 pounds. On which date? On 20th February 2017. But today is 12th November 2016. I hope you realize. You saw the year also, no? Okay. So do you realize that, okay, Trump, today you bought goods. Rishi Sunak has sold it to you. But you have not yet paid. The payment will happen in future. Can I say, for you, there is a foreign currency payable. For me, wrong answer. Home currency receivable. Everybody clear? No? Hello? Didn't understand. Pound, na? Pound is my home currency. I am Rishi Sunak. Hello? Richest Prime Minister in the world. Huh? Do you realize, for me, I am going to get my own home currency called pound. For me, there is no uncertainty. For you, there is uncertainty. Sir, why, sir? Why uncertainty for me? Because do you realize that you know that you have to pay 6,50,000 pounds? But can I say, to pay those pounds to me, you will have to go to Bank of America. You will have to go to Bank of America to buy those pounds from that bank first. Where do you have pounds? You are dollar person, no? Hello? Arey, come on. If this was Indian context, can I say, if I would have purchased goods from some Singaporean, I have to pay Singapore dollars to that person. I to am rupee person, no? I'll have to go to ICICI Bank and first buy Singapore dollars. Everybody clear, no? You're feeling heavy? I'll try, no? Hello. Even if you don't get it, just let me know at the end. It's okay, because I understand forex is not done. But try, okay? I'm trying my best. You also cooperate. Can I say, for you, your home currency is dollars. You are now due to pay a foreign currency called pounds. Do you realize, you go to your Bank of America and tell them, BOA, I want to buy pounds from you. What is the dollar pound exchange rate, which in AS 11 we called as spot rate? Everybody clear, na? What is my spot rate here? So Bank of America will say, oh, today the spot rate is this. Everybody clear? Now, the question is that spot rate of any relevance to you, Mr. Trump? No. Why no? Because Mr. Trump, you don't need pounds today. What will you do by taking pound? Today means, I'm talking of which date, na? 12th November. On this date, if you go to the bank, do you realize, on this day, if you go to the bank, on this date, that bank will give you a spot rate. That spot rate, can I say, is of no use to you. You will have to go to the bank on this day again. I hope everybody is following. And on that day, you have to buy the pounds and give it to me, Rishi Sunak. But can I say, the transaction you did on this date only, as far as the buy and sell of services or goods is concerned, payment will happen later. Can someone tell me, what uncertainty are you facing? You don't know. Just as Meet didn't know at what price he will be able to sell L&T share, Sania didn't know at what price she will buy L&T share. Donald Trump, you don't know at what price you will be able to buy pounds. Hey, everybody, are you able to understand? Pound here is like the L&T share. Come on, everyone. And rupees and Dollar here is like the rupees. Am I making sense? We will call the pound as the product that you are wanting to buy or sell, and we will call dollar as the price that you are wanting to pay for it. Hello. The product in our derivatives chapter, this was like L&T share. This was like rupees. Everyone, is it making sense? Hello. Okay. So my question to you is, do you understand that for Donald Trump there is uncertainty which he wants to hedge? Correct? There is uncertainty as to at what price. Okay, students, for some time now, pound is there. No, pound. I'm going to call pound as L&T. Just for you people. Okay? Some people just tolerate for some time. Huh? I'm going to call pound as what? L&T. Can I say Donald Trump wants to buy L&T shares? His risk lies in future. Very good, very nice answer. His risk lies in future buying of L&T shares. So to hedge, Donald Trump should buy L&T futures. Come on everyone, Donald Trump should buy L&T futures. Now remove L&T and put pound. Donald Trump should buy pound futures. Oh, go, you got it. You should buy pound futures. And now students, read the question ahead. You will understand certain things now. They are talking about pound futures. The following futures contracts. Hey, what is this? Come on everyone. Contract size means, can I say lot size? In one futures contract, you will get 62,500 L&T shares. Everybody clear? No? Hello. It is like you'll get 62,500 pounds. And they are available on the exchange. Students, they have given to you two expiries, December and March. Okay, now can I say ideal expiry that Trump you would want is February. Think about it. Ideally expiry you would have wanted is February. But do you realize February not available? Either December or March. Tell me which one do you want to go for? Very good answer. You will go for March. Why? Because March is closer to February. That is why? No. You will go for March and close out early. At least you will remain protected. Hey, everybody, are you all understanding? If you go for December, no? Can I say for some time you will have to bear the brunt of the spot. See, listen, look at this. I'll explain this. See. What happens now? Okay. Now, let's say the blue is spot market, okay? Okay. Spot market. And the red is the derivatives market. Futures. Can I say it has to merge on the end, correct? Now, students, can I say in spot, if you are long, just giving example, huh? Can I say to hedge, in futures you will short? Hello, everyone, clear? Can I say when spot falls, it is sad news? Hello? When spot falls, it is sad news. Futures also will fall only, but that is good news. Hello? When spot rises, it is great news. Futures rises, sad news, because your short position. Clarity is there, no? Do you realize that this is what I want. I want the sad to offset with the happy. Or I want the happy to offset with the sad. That is called as hedging, no? Hello, everybody clear? You know, but happy and sad means gain, loss. I hope you are understanding. When there is loss, there is gain. When there is gain, there is loss. That hedges me, correct? Everyone clear? So students, do you realize that, look at this. When spot increases, can I say futures also are increasing? Can I say hedging is happening? Hello. When spot drops, futures also drop. Can I say hedging is happening? Hello. So you see they are moving in the same direction. Hello. At the end, I hope you realize both merge. That is different thing. The point is, whenever the spot is fluctuating, futures is being loyal to you. Hello, everybody clear? They are giving you your protection. The protection might not be perfect. The perfection will happen here. Everybody clear? Where I hope you realize you will eventually get F0. S1 and F1, I hope you realize, cancels off. And what comes is F0. Hello? But can I say till even in these dates, can I say if you are suffering some loss in the spot, there will be some gain in the futures. It will not exactly offset, but there will be something. Everyone clear? No? Hello? Okay. Now my question to you is, if you go for, okay, if you go for, you know, December futures, okay, if you go for December futures, do you realize you are rejecting the protection that is there from December to Feb? Come on, everyone. If you go for March futures, protection might not be complete, but at least you are protected. See, I'll give an example to you. Let's say you are standing, you're in this building, and you have to walk from this building to, let's say, a building which is there in front. Okay, let's say that building is 100 meters. Okay, it's 100 meters, and it's raining. Your job is to reach that building without getting drenched in the rain. Can I say you will require umbrella? Okay, I give you two umbrellas. One umbrella will break down in 90 meters. One umbrella will sustain for 130 meters. Story clear? One umbrella will break down in 90 meters. One umbrella will sustain till 130 meters. Will you reject 130 meters umbrella just because it is 30 meters away from 100? Or 90 is close, not to 100. No, no, no. Arey Baba, your job is to stay protected. I would rather take the 130 meter umbrella and close it before it breaks. I hope everybody is clear. Close out before due date. At least I'll stay protected. I hope you understood my example. Students, can I say December futures is like the 90 meters umbrella. You will get drenched. You will stay protected till December, but from December to Feb you are in rains. Correct, no? Can I say 130 meter Feb? I'll go for March. So the rule is always go for the futures which tally with your spot date. If it doesn't tally, go for the futures which expire after your spot date. Hey, everyone clear till here? Sure understanding? Okay. Now, students, what should Donald Trump do? Can I say Donald Trump should, as you remember, and I hope you remember, you should buy March futures. Everybody agreeing with me? You should buy March futures. Now the question is, how many futures should Donald Trump buy? Students, do you realize he wants to hedge the buying of 6,50,000 pounds? Do you agree with me? One contract, can I say, will give him surety about 62,500 pounds. And children, this is not some cross hedging where you have to do into beta. Here it is same contract, a pound and pound. Everybody clear? So can you tell me how many contracts this comes to? 10.4, which we will round off to 10. Everybody clear? We will round it off to 10 contracts. Everyone clear? Hello? Our rule you remember, no? 0.5 and above will go upstairs. 0.5 and below will go downstairs. Everyone clear? 10 contracts we will go for. So Mr. Donald Trump, what is your position today in futures market? I will buy 10 contracts of 62,500 LNT shares each. Hello, you're understanding, no? At the rate 1.4960 rupee per share. Everyone clear, na? $1.4960 per pound. Is it making sense? Pakka. Kandippa. Okay. So now listen carefully. So what is the time now? It's 9:20. Now listen. What is question number 43? And this is Forex. Wait. Okay. Home currency dollar, foreign currency pound. Foreign currency payable in future, can I say, is pound 6,50,000. Everybody clear? Future, do you realize, is Feb 17. Hello? Okay, now we are uncertain as to what will be the buying rate. Everyone clear? What will be the buying rate of pound 6,50,000 in future? Since risk lies in future buying, to hedge we should buy pound futures. Okay, now now I'll write here, we should buy pound March futures, and for you I'm writing ideally Feb futures would be preferred since they are not available. Always go for contracts expiring after spot due date. Is it clear to all? Okay. Hello. Okay. Buy March futures. Now students, tell me, what is F0 in this question? F0 in this question is 1 pound is equal to dollars. 1 pound equal to dollar 1.4960. Everybody clear? 1.4960. Hey, it is like L&T share. There was S0, there was F0. Everyone remembers now? Okay. Now, okay, before that, lot size pound 62,500. Therefore, number of pound futures contracts to buy will be 6,50,000 divided by 62,500, 10.4 rounded off to 10 contracts. Everybody, are you there with me till here? Hello. This is what I taught you till now. Okay. Now 5 minutes are there. Let's see what we can do. They are asking you now, listen carefully please, illustrate how Donald Trump can use futures contracts to reduce the transaction risk. I already illustrated. Hello. Now on 20th February, the spot rate is this and March futures are trading at this. Are you all there? Students, before you all leave, I'm going to just show you something here and I think you will understand this. Calculation of final payoff on due date. Now, which due date? This is 20th February 17. Hey Baba, oi, rukna. Ready? Calculation of final payoff on due date. Can I start please? Now, can you think and tell me, for Donald Trump, final payoff will be a CI or a CO? Think. Final payoff CI or CO? CO is an importer, na? So can I say it will be a CO? See if this makes sense to you. Students, in the spot market, he will have to buy the pounds. Come on, everyone. In the spot market, he will have to buy the pounds. In the futures market, can I say he will have to close the futures? His original position was to buy at F0. To close, can I say he will sell at F1? Come on, everyone. Are you all able to get it? So I am writing here, this is buy at spot, correct? This is original position is buy at the rate F0. To cancel, can I say he will sell at the rate F1. Students, I think till now we have not seen a question where we were going to buy in spot. First time we are saying buy. So you see the signs are slightly going to change. Hello. At the end of the day, can I say this cancels of hedging is perfect only? Hello. But do you realize in this question hedging won't be perfect? Why? Because it's closing the umbrella before only. Everybody clear now what to do now? Little bit imperfection will be there. So students, read point number A again and tell me at what price will Donald Trump buy the share, buy pounds in the spot market. Come on. 1.5030 per pound. Very good. And how many pounds? 6,50,000. Do you agree? Hello. So do you realize he will do here 6,50,000 pounds into 1.5030. First give me this answer only please. 97. Okay, 9,76,950. Okay, use your brains. Are these L&T shares or are these rupees? I'm asking you, final answer comes in shares or final answer comes in rupees? Rupees. So are these pounds or are these dollars? Dollars. Very good. Correct. These are dollars. Everyone clear now? Okay. Now, minus. Now, students, how to do this? How many contracts Donald Trump? 10 contracts. Hey, everybody clear now? 10 contracts into. Now, students, tell me, gain or loss? Okay, take your time. Take your time. I will put this sign later. Take your time. You tell me. Original position, can I say, is to buy? Hello. Original position is to buy. Buy how? Buy at what rate did you commit to buy? What was your F0? Search the question. 1 point. Okay. So look at the screen. I'll put the minus here. Now buy is there, na buy minus, because I think we are used to, when we do the gain loss calculation, I think we are used to sell minus buy. No, hello, everyone ready? So I'll put here 1.4960. Do you all agree with me? 1.4960. To close is, can I say, cancelling? But before that, I'll just give you an arrow here to get you clarity in life. Okay. Hello, everybody clear? No? Huh. Tell me, what is the selling price? Come on, everyone. What is the selling price? 1.5120. Can anyone tell me, sir, on due date, why is the S1 and F1 not same? Because it is your personal due date. It is not the due date of the futures contract. Everybody clear, no? 1.5120. I'll put that number. Last point I'm leaving you now. 1.5120. Don't forget the lot size. No, lot size, can I say, 62,500 pounds. So into pound, 62,500. Hey, wait. Do you all understand that all these prices are in dollars? Huh? Hello. Everybody clear? This entire calculation answer will come in rupees, basically not in shares. It will come not in product, it will come in price. Everybody clear? What is the dollar coming there? Come on. Gain or loss? Do it, no problem. Gain, na gain. Correct. So do you realize I am writing here, what is the number coming to? 10,000. So I am writing here dollar 10,000. Everybody clear? Dollar 10,000. I'm sorry, this is gain, na? Hello. Gain. Hey, do you realize this is minus? Hello. Are you all there? Minus S1 plus this gain. Getting clarity? Okay. So tell me. Acha, ek minute, before you get any confusion that here it was minus, how you made it plus? Students, wait. This minus is here, huh? Hello. And this plus is here. Everyone getting credit, na? Sell I have taken first and buy I am taking later. Hello. Sure, na? Okay. So, tell me, what is your final answer? 966, 950 is your final. That is a cash outflow of dollar 966, 950 is what Donald Trump will have to pay on due date. Everyone clear? Now in this, students, can I say your hedge was not perfect, but tomorrow's lecture I want to show you what would have happened to you if you wouldn't have taken futures, how the futures benefited, etc., etc. We will talk tomorrow. You really want to continue currency futures? You are enjoying this? Okay, so we will continue currency tomorrow. No, maybe till 9 o'clock or 10 o'clock this will continue. Then post the second lecture, basically we'll go into options and all. Okay. Thank you very much. Today's lecture clear. Okay, thank you. Bye bye. Take care.